Markets are buzzing with a mix of excitement and uncertainty as investors weigh the latest economic signals. But here's where it gets tricky. While some see a clear path to lower interest rates, others are questioning if the data truly justifies such optimism. Let's break down what's driving this week's market drama and why it matters for your portfolio. Trading in the futures market has remained relatively stable overnight after a blockbuster session on Thursday. The big three indices, Dow, S&P 500, and Nasdaq, all closed at record highs, with the Dow breaking through the 46,000 barrier for the first time. This surge came despite a slightly hotter than expected inflation report, which showed consumer prices rising 0.4% in August, annualized 2.9%. But here's the twist. Jobless claims skyrocketed to 263,000, the highest since 2021. Overshadowing the inflation data and fueling rate cut speculation.
Seema Shah of Principal Asset Management explains the paradox. The CPI numbers were a bit hotter than expected, but the jobs market is sending a stronger signal. This unexpected spike in unemployment claims might actually push the Fed to act faster than anticipated. After all, Powell has always prioritized employment stability over minor inflation fluctuations. According to the CME FedWatch tool, markets are pricing in a near certainty of a 25 basis point rate cut at the Fed's September 17 meeting. But here's the part most people miss. This isn't just about numbers. It's about timing. A rate cut now could either be seen as proactive or premature, depending on who you ask. Some analysts argue the Fed is already behind the curve, while others warn that cutting rates too early could reignite inflation. Looking at the broader picture, all three major indices are up roughly 1.6% this week, with the S&P 500 on track for its best performance since early August. The Nasdaq is riding a 2-week winning streak, and the Dow is finally seeing positive momentum after a 3-week slump. But don't get too comfortable. Market volatility often spikes around Fed decisions. And what about the stocks making headlines after hours? Adobe shares jumped nearly 3% after beating earnings estimates, proving that strong corporate performance can still drive gains. Meanwhile, luxury furniture giant RH saw a 6% drop after missing revenue targets. Most intriguingly, Supermicro Computer soared over 4% after announcing global shipments of its NVIDIA Blackwell Ultra solutions, highlighting the AI sector's explosive potential. So here's the million-dollar question. Are we witnessing the start of a sustained rate cut cycle, or is this just a temporary reprieve? The Fed's upcoming decision could either confirm the market's optimism or expose cracks in the current narrative. What's your take?
Share your thoughts in the comments. Do you believe the Fed will deliver a multi-rate cut strategy, or are we in for a surprise?